The Delta variant continues to challenge Australia's economic recovery with extended lockdowns, but the 2022 outlook does remain promising. Our latest thoughts for this critical period of the pandemic. The deepening lockdowns in New South Wales and snap lockdowns elsewhere are clearly the primary focus, with third quarter GDP now set to be a sharp contraction, and businesses and workers heavily reliant on support measures until vaccination rates pick up. It's crucial that the lockdowns are effective to minimise these disruptions, but until then, the range of support measures are vital, and so the current fiscal support of around $1 billion per week may need to be ramped up further. Lockdowns will be a regular occurrence until vaccination rates increase. So, as highlighted in each of our updates this year, the success of vaccine rollouts is the key leading indicator for Australia's economy in the short term. The initial target on this ratio is now set at 70% of the adult population fully vaccinated, with 80% required to reopen international borders. So, the lack of progress thus far is a concern, and links back to why the economy will contract this quarter. However, there is confidence that 70% can be reached by year-end and 80% by early next year. And the latest RBA forecasts do have the unemployment rate down to 4.25% within 12 months, despite a likely uptick over the next few months. The recent fall in the jobless rate down to below 5% for the first time in a decade shows how resilient our economy has been, and how quickly we bounce back from lockdowns. But the New South Wales and more recently South East Queensland outbreaks may see a temporary rise back to 5.25%. National GDP will contract 2% this quarter, but the rebound through spring should be strong as restrictions ease, although that GDP data isn't actually released until December for Q3 and not until March for the fourth quarter rebound. So the jobs data will be more timely in tracking progress. Despite these setbacks, the housing market continues to power ahead, and international trade data continues to run strongly. But the Aussie dollar has been on the back foot as the Delta variant takes its toll, and with commodity prices, especially iron ore, easing back from recent highs. Consensus is still for a firm Australian dollar through year-end, but the Reserve Bank have done a great job in helping to push the Aussie down from 80 cents to 73 cents since March. And while the RBA are still pressing ahead with QE tapering in September, they're a long way from official rate hikes, unlike New Zealand, where rates will likely be increased this month. With no RBA rate hikes likely until early 2023, the stock market continues to look on the bright side of ultra-low interest rates. And while Australia still lags the US indices amid their strong corporate earnings, we're outperforming the rest of the world, reflecting the strength in our labour markets. Once again, the financial markets are focused on the potential of the post-pandemic economy, so they clearly have faith that our vaccination rates can achieve those targets, which will end snap lockdowns and reopen borders. Until then, our thoughts are with impacted households and businesses. Policy support is as crucial as ever to building the bridge to the future, but the economic foundation thus far is a sound one. And that's the market update from Bendigo Bank.